Welcome to NIPFP podcast. This is part of our ongoing series of podcast in the Golden Jubilee year, and it's a pleasure to have today with us Dr. Ruud de Mooij. He is currently the Deputy Director in the International Monetary Fund's Fiscal Affairs Department. Previously at IMF, he was also heading the Tax Policy Division. Prior to joining the IMF, he has a varied experience. He was professor of public economics at Erasmus University in Rotterdam, extensively published in top journals on taxation, and has years of experience in doing tax policy for over even 25 countries. He was also a research fellow at the University of Oxford, and currently sort of dealing with variety of issues in tax policy. So thank you so much for your time being at NIPFP, and it's a pleasure to have you for this discussion. Maybe if you can begin with what are your current work, what do you sort of deal with in the tax policy division as of now, and what is the kind of subjects that you sort of oversee in your division?
Okay, well, thank you first of all for inviting me. It's very great pleasure and honor to be here for the Jubilee and the 50th anniversary of the NIPFP. So the topics that keep us busy at the IMF Fiscal Affairs Department on the tax sides are first of all domestic revenue mobilization.
Okay.
So domestic revenue mobilization is front and center in many of our members. Okay. Because there is huge pressure on public finances. Many countries are dealing with high debt ratios, especially rising interest burdens because of rising interest rates. So how to manage the public finances. And at the same time, what we see is high spending needs. So spending needs for development, so the traditional spending needs for financing education, healthcare, infrastructure, and so on. But in addition to that, we also observing the need for financing adaptation investment related to climate change.
I see.
Countries have increasing needs to fund these adaptation investments. Many countries are dealing with aging populations,
Okay.
Which put pressure on public finances.
Surely.
So domestic revenue mobilization is really front and center, and what we do with countries is helping them build good tax policies, good tax administration to deal with these issues.
I see. And so just to sort of get a sense about maybe the current paradigm about tax policy, has this drastically changed post-COVID, or is it something that has been an ongoing process of sort of changing or improving tax policies, or do you see a marked shift essentially after COVID?
Well, what we do see is that basically since COVID, technology is really taking off.
Okay.
So digitalization has been going on for a while, but what we see with artificial intelligence, which basically really took off in 2022 with the sort of introduction of ChatGPT.
Yeah, that's true.
The speed of change is
absolutely.
so drastic, and what we are currently doing is thinking through what will be the implications of the new technologies for taxation.
Okay.
So that is also front and center.
Front and center.
And the implication can be magnificent. So
I see. So we'll discuss a little bit more about that in detail. You brought out three very important perspectives about it, particularly on domestic resource mobilization and the introduction of the AI, and so we'll sort of get into that in a little while. Let's say coming to a very specific India-specific sort of context, how do you see the problems of, or I should say, how do you look at domestic resource mobilization as a challenge if we consider, let's say, data as the new oil in some ways, or particularly in areas which are heavily data centric, or services that are very heavily data centric? So where do you see these new challenges coming up for domestic resource mobilization?
Yeah, that's interesting. You mentioned data as the new oil, which is, I think, a very interesting parallel, because oil for many countries has been an important source of revenue. countries that have the luxury of
Resource.
having oil, governments can share in the rents of the oil, which is of course extremely valuable on international markets. So oil companies generate huge profits, and the governments can share in these profits. So that's important traditionally. Now, the parallel between data as the new oil suggests that, well, today we have these tech companies, and tech companies rely on information from their users
Absolutely.
as part of their business model. So they earn money by using the user data to train their models or
And
to
then
feed
further
into their
develop.
algorithms.
Yeah.
So the parallel is interesting, and the question is, can countries also exploit the value of these data, the value of this information for revenue mobilization? Now there are these parallels, but there's also important differences. So one important difference is that oil companies, to extract the oil, have to have physical presence in the countries where they operate.
Yeah.
So to get the oil from the ground,
Maybe the
you
mining
need-
rights and so on and so forth.
Yeah, you need the mining rights, you need capital, you need employees. For digital companies, they can operate in these countries without any physical presence.
Absolutely.
So that's an important difference. The other important difference is that for oil, there's international markets. We know exactly what is the oil price. So you can determine the profits of the oil companies quite easily. And you can also say, well, we're going to tax the profits, or we're going to tax with royalties. We tax the value of the trades. With data, it's much more difficult. What is the value of the data that is used by a specific company? That is much more difficult to determine. So there are these parallels, but there's also important differences.
Right, absolutely.
And whether this can be utilized as a source of revenue, there are discussions ongoing, but it's more difficult in that sense.
So does this present a peculiar challenge for designing tax policies? And then, of course, does it then later translate into how do we use this kind of a tax policy for domestic resource mobilization?
Yeah, so this has led basically to an important international discussion, because traditionally, when we tax a multinational company, the taxing rights are allocated to countries where there is a physical presence.
Yes, absolutely.
That is the basis for the international tax
Jurisdiction,
framework, for international tax treaties. So it's always physical presence. And the issue is, with these tech companies, there is no physical presence. There's only a digital presence.
Yeah.
So how to deal with that has been subject to a lot of discussion, because countries feel uncomfortable with the way in which multinationals are taxed, because they say they create value in my country with their digital presence, but they don't pay profits here. So this feels sort of unfair, which has led to a lot of discussion on, should we tax more where basically the market is, where the users are? Should multinationals pay tax there? So there's discussions on, should treaties be modified to also enable taxing rights where there is a digital presence, or where there is a significant economic presence with a lot of value sales, let's say. So, and this has led to proposals for more destination-based taxes, a destination-based cash flow tax, but it also led to the emergence of Pillar 1 in the international tax framework. So it's really entering the policy discussion. There was almost an agreement, and in 21 there was basically political agreement, but in the sort of technical implementation, countries have not been able to agree yet. But it's still at the table to change basically the way in which we tax the multinationals. And if we can tax multinationals where they have their users, then these countries can also share in the taxation of profits.
Because by that logic, it has quite significant implications for companies operating within India.
Exactly.
And because the market size, given the market size, and it has fairly huge tax implications for such companies.
So it would mean that India can share in the profit taxation of the large tech companies, that operate massively in India.
That's true.
So that's an important discussion. Of course, given that they have not been able to agree, countries are seeking alternative ways of doing it. And this has led to digital service taxes. India used for some years the equalization levy.
I'll come. Yeah, that's a very nice point that you mentioned. But before I get to this equalization part, a related aspect of this digital presence is this debate on data localization. And we've had several debates on and even some policy statements on this aspect of data localization. How do you see a framework evolving for data localization, and particularly from the perspective of taxation?
Yeah, I think this really relates to this issue of where should the taxing right be. So if the data, who owns the data of the users, is an important conceptual question, which we have not sort of been able to agree upon. And if you think the data belong to the country where the users are, there should be some reflection of that in taxation, international tax law.
Taxation,
so and this has been the discussion that has been ongoing. And I think countries are starting to change their tax treaties already. So I think India is one example, significant economic presence.
Yes, absolutely.
But of course, for tax treaties, you need to agree with the other countries. So India needs to agree with the US on many the tax treaties, especially on the treatment. So this is something that is still an ongoing discussion. But data localization, I think that translates into the issue of
jurisdiction.
Where is the ownership ultimately of the data?
I see. So coming to the point that you mentioned about the equalization levy, so India has done away with that 2% equalization levy, which is sort of going in consensus with the Pillar 1 aspect of the framework on global tax reform. But domestically, if you see, India does levy 18% GST on digital services essentially. So how do you see this aspect when foreign service providers are also taxed on aspects of, on particularly on GST when it is provided by a foreign service provider in India?
Now there's two distinct issues related to the equalization levy and digital service tax, I guess. So one is the GST issue, as you mentioned. The other is levying a tax such as a DST in lieu of the income tax. So on the GST, what you would like to achieve is a level playing field. Because the GST is a tax that is based on the destination principle. So wherever a service or a product is consumed, you want to impose the same tax. And it should be, whether it's domestically produced or foreign produced, it should be the same tax.
Precisely.
The question has always been how to implement the destination principle for digital services that are sort of provided
from outside,
offshore, outside. So they're imported, but there's no physical presence of that company. So who are you going to send the bill to?
Absolutely.
So that issue has been resolved, I guess, in many countries by sort of a new implementation framework. And the implementation framework for business-to-business services has always been quite easy to resolve. Because you can apply the reverse charging mechanism. So the importer is obliged to apply the VAT or GST on imports, and when he sells the product, he can get a credit for the input
tax already
credits. But for business to consumers, that's more difficult because the consumers are not liable to register for the GST. So for that, countries have implemented the vendor collection model. So they oblige the foreign supplier to register for VAT in the country. There's a simplified registration method. The company cannot claim any credits for input VAT. So it's very simple, but they have to apply the VAT or the GST to the sales they do in the country. So let's say if Google sells to a consumer or Netflix sells services to a consumer in India, it has to apply the 18% VAT or GST to the sale. So I think this has resolved this level
Part of the
playing
issue.
field. And countries in the beginning were afraid, well, are these companies going to comply? But in practice, it appears that the compliance has been quite good, and this seems to be a good solution to the level playing field. Now, the other issue is the income tax, which is more related to
the
sort of
shifting or
well, the fact that you cannot apply income tax to these foreign companies. Maybe you can do a digital service tax as a substitute for that. So countries have been doing that. This comes with all kinds of concerns, distortions, double taxation, trade
because
disputes.
you've already imposed another set of GST on the service provider. So having another layer of taxation, particularly from the income side. So how do you think that issue is either getting resolved, or what is an approach to doing that?
Yeah, so basically the international discussion has been these digital service taxes or equalization levies as a substitute for the income tax is not a first best solution. It's much better to have a better allocation or a new allocation of taxing rights of the profits directly. That is more efficient, that taxes the profits only once, and so on. So digital service taxes have been part of the agreement of Pillar 1, which was, well, if once we have a newly established taxing rights for the profits, countries agreed to abolish their digital service taxes. So that was the agreement. So it's really a substitute for, but a very imperfect substitute, I would say.
It's still not a first best.
No, this is definitely not a first best solution. So, and I think India has been one of the first to abolish actually their equalization levy. Other countries, I think there are about 30 countries now that have the tax. We don't know what will happen with them, but I don't think this is a sustainable solution to the issue.
Not getting resolved anytime soon. Just let me continue on this aspect of a very country-specific issue. So in India, probably you're aware that we have a fairly large informal sector where we still have cash-based transactions, and those are part and parcel of how the sort of economy functions. And in a cash-based system, one can probably argue that it's difficult to tax beyond the first point of sale. So in such a regime, how do you see this kind of taxation, particularly on digital services and on other related sort of services being taxed, or what kind of framework can evolve in this sort of situation?
No, this is a common issue in developing countries, sort of the large informal sector, which reduces the base for also the GST. In principle, the GST is designed in a way that encourages compliance.
Because definitely,
if you charge VAT, you can also claim a credit for the input VAT. So that is attractive to be compliant. But if you have breaks in the chain for some reason, if there's one trader that does not comply with the GST, then of course it doesn't charge GST, and then
the subsequent seller cannot
claim the credits. So it sort of breaks the chain, and it also breaks the compliance incentives. And also at the end of the chain, the retail sales, of course, there is a sale to the consumer. So the consumer will not claim any credits. So there's no incentive.
No incentive for the previous one to even comply. So that sort of breaks down.
But I think there's a lot that governments can do to improve the compliance and to reduce the compliance gap. By the way, we also try to quantify these compliance gaps, and usually in developing countries between 30 and 40% of the revenue is foregone because of the non-compliance. So this is a serious problem. I think game changers are digitalization, which really creates a trail that tax administrations can use to improve compliance. So digital, electronic invoicing, electronic registers, and empirical studies show that this really has improved
an impact
compliance.
On compliance. And
so this is important. I think what is also good is a good compliance risk management, where you focus in particular on the larger traders. You can focus on the small traders, but there's not a lot of money to gain. If you focus more on the larger traders, so you just have an exemption threshold for the VAT. The small traders you deal with maybe later, but focus on the larger traders. And what is also important is good policy. If you have a system with a lot of exemptions, the exemptions also cause a break in the chain of the value added. So it also causes a break in the chain of the compliance incentives.
I see.
So design also matters ultimately for compliance.
Yeah, so in the effort of, let's say, making the ease of doing business, it would be a solution towards having maybe, let's say, lower exemptions, a wider digital presence, which is probably lower cost of compliance and lowering the cost of even managing and maintaining the entire infrastructure. So probably that is something which can work.
No, fully agree. I think there's a lot to gain from further digitalization. I think India has been an example for many countries in terms of its digitalization, the digital public infrastructure with the digital ID, digital payments, digital information exchange. So, but I think the next stage will be artificial intelligence. To what extent can tax administrations utilize all types of information to identify the main risks related to compliance? And can it improve compliance in this way? And I think that's the next level.
I mean, you've just mentioned it. I was almost about to ask you this question about how do you see the role of this kind of an artificial intelligence and sort of a machine learning ecosystem that is being introduced both for in the entire taxation space, maybe for maintaining tax records, doing the analytical work, maybe detecting evasion. So that is something which you see as, how do you see this going forward, or how do you see tax administrations getting more and more value from using these kind of systems?
Yeah, so the revenue administrations have a wealth of information. Sometimes it's so overwhelming, they don't know what to do with it. What artificial intelligence can do is easily using unstructured information to produce valuable information to act upon. So this can be a game changer, I think, for revenue administrations in, let's say, identifying the major risks. And then for that major risk, you're going to do an audit. And within the audit, you can utilize all sorts of information. Think of, for instance, a high wealth individuals unit. Many tax administration have a special unit to do that. You can collect so much information,
triangulate,
even public information. To identify potential risks with the tax liability of certain individuals or certain companies. Think of transfer pricing. There's so much information online on comparable pricing that you can utilize for transfer pricing audits. So I think there's a lot to be gained by the use, and the developments are really fast in artificial intelligence. But the prospect is that this is going to be important for.
So it has to be sort of leverage. So what you probably, if I understand what you're really suggesting, is this can be leveraged by tax administration to be more an actionable policy or an actionable decision, something that can lead you to doing more targeted or a more specific intervention.
Absolutely.
Is that what?
No, absolutely. You can use information in a better manner. At the same time, however, artificial intelligence also changes markets. For instance, on the labor markets, some people are really concerned that artificial intelligence is going to lead to job displacements.
Yes, that is true.
So if a lot of people become unemployed because machines are taking over their tasks, this may shrink the labor income tax base, so may reduce revenue.
Absolutely.
So the revenue administration may, on the one hand, be more effective in collecting, but on the other hand, you may have artificial intelligence risking part of
even the size of tax administration might actually shrink because you require less administrators to sort of deal with. So are these counterbalancing forces of?
Well, there's a lot of uncertainty when it comes to artificial intelligence. So is the new technology going to displace labor, or is it going to augment labor? Is it going to make people more productive? It's very hard to foresee how this will evolve. You can think of scenarios but it's good to think about these scenarios and to think, well, what would happen if there would be large labor displacement? Should we rethink the way we tax sort of capital income versus labor income, for instance? Should we rethink maybe capital gains taxation? So I think it's important to start thinking about these issues, even if the scenario would not be that extreme, or which we don't.
Nobody's imagining a doomsday scenario in that sense, but I mean, just to on this point, I mean, just to get a perspective on it. So, do you see any potential risks being used that the whole interface of our tax administration might change once we use AI, or once we use more and more of these computer-based or analytical-based?
Well, there are
certain potential risks that you see.
This is a very important issue. There are potential risks related to the use of AI as well. And my home country is the Netherlands, which experienced one of these risks. So they relied on artificial intelligence to select risks related to social transfers. So there could be fraud with social transfers, and so they used a model that was trained on certain data, but these appear to be biased data.
I see.
So the model actually identified people who were not fraudsters, and these people turned out to be immigrants.
I see. Okay.
So the model targeted mainly immigrants as fraudsters of the system. This became a huge scandal because this was based on a biased model.
I see.
So
there are potential
it's very
risks.
important that humans remain in the loop, humans remain responsible, because they relied on automated systems that sent letters to these people almost in an automated way.
I see.
So I think the main lesson is keep humans in the loop. Humans remain very important, and we should be cautious for biased models. And this is a risk related to the use of AI.
Yeah. Eventually, human intelligence would be required to sort of.
Yeah, humans remain responsible, and we should keep humans in the loop. And this also is a lesson, I think, for revenue administrations. It's very important to have a policy in place in the revenue administration for responsible use of AI.
That's true.
Not only revenue administration, it should probably be all organizations. We should have responsible use of AI.
That's true. Coming back to that one last question on the aspect of domestic revenue mobilization. You mentioned that, of course, this is now a challenge. Particularly, how do you see the corporate income tax, the share of corporate income tax, let's say in India also, has either been stagnant or been declining over some years, and particularly when now this kind of taxation system or a taxation policy is likely to have a newer framework. So how do you see the challenge of, and particularly I missed mentioning one aspect of it, which is capital flight and essentially going from developing countries to other countries. So how do you see this aspect of corporate taxation, and particularly from the sense of domestic revenue mobilization?
Yeah, so corporate income tax traditionally has been a relatively important source of revenue for developing countries. So the share of total revenue is higher than, for instance, in advanced economies. So it's an important aspect of domestic revenue mobilization. In India, I think it's a little above 3% of GDP.
And it's more stagnant or probably even declining, because so that way it has become a challenge for revenue mobilization. So how do you see this going forward, and particularly some core elements of the tax policy which can sort of augment this part of corporate taxation?
Well, for the corporate income tax, there's always the challenge. You want to raise revenue from the profit of the companies that operate in your country and that utilize your infrastructure and educated workforce. So they generate profits by utilizing all that. You want to have a share of that profit. At the same time, you don't want the tax to lead to companies not to come to your country. So that's the capital flight that you mentioned. I think it's sometimes a bit overemphasize the capital flight. I think many companies come to India, for instance, for other reasons. There's a huge market.
Yeah.
The market size is an important factor for location. The quality of education is very important for multinationals. The quality of infrastructure, the quality of the institutions, the reliability of the political system and the institutions. These are all more important usually than taxation. Taxation is still an important aspect, but it's not the most important. Because it's still important, of course, you can't have a very high tax rate and
true.
try to extract all the rents. So India now has a tax rate of around 22% for most companies, which is a little bit below the world average. So I don't think India sort of stands out as a high tax country anymore. When it comes to all sorts of tax incentives, I think tax incentives are common when it comes to encouraging companies to invest. Invest in R&D, for instance. Many countries have R&D incentives, which makes sense because R&D incentives, if you innovate, that can spread to other companies, and so there are positive spillovers associated with that. But some countries also give away their entire tax base in order to attract these investments. These, the evidence suggests that this is probably often redundant, so these companies would have come also without that incentive. So even if you ask the companies themselves, 80 to 90% say, oh yeah, we would have come also without the incentives.
Without the exemptions.
So that's of course a loss of revenue without having an impact on so I think you need to be very cautious in sort of being too generous in providing tax incentives, especially exemptions or exemptions in certain special economic zones and so on. So finding the right balance is a reasonable tax to finance good public goods provision is probably a wise choice for your regime.
Okay, but then just to end on this note, but do you think then there would be, or is it even worth trying to sort of make corporate income tax as a point of domestic revenue mobilization, or do you think we've reached a level where we just have to sort of probably maintain that level, or do you think there is scope for enhancing this kind of revenue mobilization?
Well, I think the corporate income tax, in India about 3% is probably a level that is reasonable.
Okay.
I think it requires maintenance. For instance, what we've seen in the past, that multinationals started to shift their profits. Governments responded by having anti-avoidance. I think that's a must for countries to have anti-avoidance, because otherwise you lose your tax base. So the corporate income tax requires maintenance. I don't expect that to be a source of revenue that is going to expand massively in the future.
Okay, not necessarily expanding in the future.
Of course, if profits would rise, then that could be. For instance, countries that have a large tech sector, the tech sector earns large profits, then you may expect larger revenue from these profits. But of course, it's not only that country that wants to tax that profit, but also others. So how that will play out, we will have to see.
Before we let you go, I mean, there is one interesting part that we would sort of like to have your views. You've been in big multinational institutions. You've also been a faculty. You've also been a researcher at let's say at Oxford and at other universities. So how do you see the difference between pure academic research and, let's say, a policy institution where you are heading taxation, where you're heading maybe the macro side of countries? How do you see the connection between the research work that you do and the kind of policy decisions that you take?
Okay, well, this is a fascinating question. That's very close to my heart. I've always worked both on sort of research and policy advice. In my view, a good theoretical foundation, the conceptual foundation, is very important. So thinking in terms of optimal text theory. Optimal text theory is ultimately my guide
I see.
in
Okay.
assessing whether a certain text is a good text
Okay.
or not a good text. And a good text is it's efficient, it's equitable, and it's enforceable.
That's.
And enforceable requires, well, you need to have the information
Mhm.
in order to implement a certain text. So optimal text theory is my guide, thinking about, well, is this a good text or not? But then you have to translate that into actionable
action,
policies.
yes.
Actionable policy, you have to contribute to the discussion, you have to communicate with people. And you're not going to communicate with people in terms of, well, this is a result from an optimal text model. That doesn't convince people.
Mhm.
So you have to make the translation towards the day-to-day practice of policy. But with the conceptual framework in mind, conceptual framework guides me in informing on policy, and then you have to make that translation into actionable policies. For that we need good empirical evidence also. Does that policy work under certain circumstances? Does it work? So all types of research can inform if a policy works. So you can have cross-country analysis. Does the policy work on average? You can have individual country studies. Does that policy work in the specific context of my country? All that collective wisdom of empirical research is essential, I guess, to inform the policy debate and to also convince others, convince a minister to say, this is a policy we need to do because it works. It works in country X under these circumstances. It works on average in these countries. So I think this is the way in which also institutions like the NIPFP can contribute to the policy discussion and ultimately improve the design and the implementation of policies, which is essential for the well-being of the people.
Yeah, that's
if
true.
we design policies in the wrong way, there can be huge costs.
That's true.
And if we do it the right way, it can have huge benefits ultimately for the people of India.
That's true. That's true. So just to get a final perspective about how being in places like IMF and being in other institutions, how much of your own research does contribute to your own decision making when you look at policy across countries, or when you are heading a division like tax policy research or fiscal affairs? How much that translates into your own research and of course teaching, because I'm assuming that you're equally passionate about teaching, going into many of these universities. So how does that translate into your own research and your own teaching?
Yeah, that's interesting because so we work a lot with countries, so we have so much engagements, and from each engagement we learn from about whether policy works or not, what are the considerations in a specific context, and that I experienced that with my exchanges with countries, but all the people in our team do the same. So collectively we exchange information about what works and what not, and that informs about sort of our collective view on certain issues. And also informs about do the policies that work for advanced economies, are they appropriate for developing countries? And with the exchanges that we have among each other, we sort of come to a collective view on, well, maybe this policy is not the right thing, or this is probably, let's take an example, the GST. We often say we should have a threshold below which registration for this GST is not necessary because it's too high compliance costs, too high administrative costs to do that. So what is the right threshold for that in developing countries versus advanced economies? The considerations can be very different. So we have a lot of discussion about on these issues, and it's all informed ultimately by evidence. So it's really evidence-based policy making what sort of determines how we advise countries on their policies.
Choose the best decision amongst that
Yeah,
is
yeah.
available.
And the evidence is super important, and evidence we draw from institutions like NIPFP for India and similar institutions in other countries. And that's why the work of NIPFP is so important.
Yeah, thank you. Thank you so much. You've had a great discussion and you've shared your views on a variety of subjects on digital services, on taxation, and even on maybe cross-country experience. It's been a pleasure having you for this talk. So thank you so much for your time, and we hope to see you again, and we hope to have more of your work and more of your research, and we'll get that's interesting both in terms of policy as well as for research. So thank you so much for your time.
You're welcome. Thank you very much.